Good evening. Good evening. How are you? What is today? It is Wednesday, November 30th, 2022. I'm John Shink, your host for tonight. Who am I? Well, I'm a broker. I'm a managing broker. I'm the founder of Deerwood Realty in St. Louis, Missouri. We're a small residential firm. It's just me. It's just me. And I help buyers buy homes and sellers sell them. Theirs. Don't sell themselves. That'd be terrible. I've had a day. And I think we'll just kind of leave it at that. As you get older, or at least it feels like to me, time moves very, very quickly. Today is Wednesday. Like, I could have sworn it was like Monday yesterday. I've lost a day, and yet I streamed. Like, I was here, and it just blows my mind. When I was a kid, days would last forever. Now, maybe part of that was the world we were living in. I couldn't take a television with me in the car. That a phone in my car, that'd be only the wealthiest of the wealthy had car phones when I was a kid that I could remember. And those phones were attached to the car. It's funny when you go back and look at things that made perfect sense at one point in time, but now make none. As an example, a phone booth. So there's these things, and you go and say you want to make a phone call. Well, you don't have a phone in your pocket. So you go in this little booth, and then you can, I think some of them had chairs, little benches, and you could sit there, and you could also, it had a phone number, which is really weird. It had a phone number, and you could tell the person somehow, hey, call this number at this time and I'll be there. And then I'll answer the phone, which is just wild. But yeah, no, I have not seen phone booths in a while. There's nothing to me. I know this is, look, I'm old, 45. I know some of you are like, no, you're a young whippersnapper compared to me. I'm like 90. But no, I just mean in the way I see things. Okay. So phone booth. Like when I was a kid, okay, we had these things called boom boxes. Okay. And if you were really cool, which I wasn't, you would take a boom box and put it on your shoulder, and then you would walk around with it. And it would be playing this music, right? That was stupid. I mean, can we all agree that was dumb now? But see, there's a newer version of it. Now the kids have these like not US Bluetooth, like little boom boxes, like the size of like a baseball. And I saw a little kid yesterday, probably 7th grade, 8th grade. He's so proud of himself. He's just blaring just offensive music all the way down the street. And you could wear headphones, but no, you need to let everybody in the neighborhood hear your awful music. And what I was thinking is, it kind of works the same way as the phone does now. How many times do you go somewhere and people are just on their phones and they're just screaming into their phones, and you don't really want to be in their conversation? Like, you don't want to know what their conversation's about. One of my stepchildren is really bad at the FaceTime. So like, I'm not gonna throw them under the bus. I'm just gonna say them. One of them, but they walk around and literally are screaming into their phone, and I have to hear it. Like, as if I want to be a part of their conversation. I don't want to be a part of their conversation. I don't want to know that they're even on the phone. So in this case, and I'm sure you've seen it in public, a phone booth makes wonderful sense in that you could literally just walk into the booth and start talking on FaceTime with your friend and like keep us out of it. I don't know. Seems like a good idea to me. I don't leave it in the comment section or put it in the chat. I don't know which ways to go tonight. There's all kinds of things that are kind of circling around my mind. Let's go over what I have written down for the notes for tonight, at least for the highlights. We're going to go talk on something about a friendship gone wrong in our Google Trends. We're going to go on Twitter. There's some wonderful, wonderful tweets today. And I'm going to get back to the Twitter for just a second in a minute, but then we're going to talk. I say the Twitter, joking, of course. I get that it's not. Anyway, then we're going to talk about, we're going to do some real estate news and commentary. We're going to talk about a few things. One, Realtor.com came out with its 2023 housing prediction today, I believe. I'm not sure if it was today or yesterday, but anyway, we'll look at that. We'll look at the inflation-adjusted home prices, which have gotten more than or 3% below peak. We'll talk about that. I don't know how that's going to go. We'll find out. And then Airbnb came out with a new service today, and we'll talk about it. And we'll talk about it in the spirit of what I've been seeing in the marketplace myself, in the spirit of what other people are writing about the Airbnb and secondary rental market. I'm not going to be in the majority on this one. I already know that. And so yeah, that's that. One thing on Twitter, I want to make a complaint. No one cares what I think about Twitter. I get that. But I mean, I've got this space and I might as well use it. So look, well, there's two things about Twitter I don't like. One, if people are talking in spaces, it's on my phone and then it goes up to the top and I can't get out of it. I don't want to be in Twitter spaces. I don't understand the point of like talking on Twitter that way. So if somebody can help me out there, that'd be great. The second thing is I don't like threads that are like 30 pages long. I feel like this is how it should be done. If you have something to say, and I don't care if it's long, okay? I just don't want it to be in 40 threads. Just maybe, I mean, I don't know. It's 2022. I suspect you can get someone to put together a website for you, or you can get a simple template site and create yourself like a little blog section and then link your stuff right to the blog section and be done with it. I mean, will you be able to monetize your traffic? I don't know. You can even look like one of the guys we're going to read tonight uses Substack. Okay. Use that. I mean, you say, well, I don't want people to have to pay. I think you go to Locals. You can go to locals.com. I'm on there. Not very well. You can write something there and send people that direction. You can leave it free. You don't have to put it behind a paywall. If you want to put it behind a paywall, go for it. But don't give me a tweet that's like 13 or 14 or 40 threads. And I'm going to read one today. I think it's like 10 at the most, but it's a good one. That's the other issue is like, I'm not very good at Twitter. I don't ever have the urge to say something in the written format quickly. Like you're not going to get me say, oh, I spent my day doing this. Or you're not going to get me like stabbing someone in the back that wrote something on Twitter. They write the dumbest thing they want to. I don't want to have well, I wasn't going to do this, but now since let me make some changes. Let me make some changes if I can. Oh, not good. I'll do it this way. I don't want to be accused of bullying. I don't want to bully. But I saw one of the dumbest tweets ever the other day. And I don't know if you've seen it or heard about it. I don't know if they're going to keep it. But when I saw it, it was so bad that maybe she deleted it because it was so stupid. That would be good. I know that. Oh, here we go. I think this is it. Okay, I've got it. We'll start there first because it was, and I want to have it all linked and everything. I want you to be able to see it if you're interested in this sort of thing. And I'm just. So if you get to be old like me, okay, and I put that I didn't do it in quotes, but if you get to be old like me, all right, this is bad. Okay, good. All right, let me do this. So, do you guys know who Alyssa Milano is? I'm asking that seriously. Alyssa Milano, I don't. When was she born? 1972. I'm 1977. Okay, so my whole life has been kind of. I've grown up with Alyssa Milano. She's the worst of my generation by far. You may say like, well, that's harsh, but I mean, really, there's a lot of people that are like Alyssa Milano, and they are the worst. They grew up with like this. I don't know. But anyway, loved Alyssa Milano. Alyssa Milano was what 5 years older than me. She was in Who's the Boss, which I just found that out like because I'd forgotten why she was even famous. It's been that long. Um, it was her and Tiffany Amber Thiessen who was in Saved by the Bell. Those those two girls had to be the most popular girls there were. Um, except for the Olsen twins, but that was later. Anyway, I honestly, in the last 20 years, what has she done? I think she dated a pitcher at one point in time, one of the Cardinals pitchers, Josh Beckett, I think. And I'm not trying to slander her or anything. If I'm wrong, I'm wrong. I just remember that she was married to, or not married. I don't even know if she was, it doesn't matter. She was with that guy and she'd been going out with a lot of baseball players. I don't know what she's up to now. It doesn't matter as far as like, I don't care what she does with her dating life or anything like that. All my point is that I don't know that people know her as an actress anymore. I think people think of her as an activist, as a henchman for, some, I don't know. It's not that it's anyway. Anyway, she wrote a tweet. People were just dunking all over her for it. I will read you the tweet if you haven't seen it, and then we will discuss. We will discuss where we are in this. Okay. Let me do this. Okay. Here it is. It says, I gave back my Tesla. I bought the Volkswagen EV. I love it. I'm not sure how advertisers can buy space on Twitter. Publicly traded companies' products being pushed in alignment with hate and white supremacy doesn't seem to be a winning business model. And then the first person to write, it says Volkswagen was literally founded by the Nazis and Hitler. which it was. Somebody else I don't want to dunk on her, but I do want to talk about this if we can. Okay. To own a Tesla, I mean, this is for me. I'm middle class, maybe lower middle class, Midwestern. Okay. I gave back my Tesla. Number one, I can't buy a Tesla. I can't even afford one. Okay. Number two, I bought the Volkswagen, electric vehicle. Look, I have always been hesitant to buy products from Volkswagen, Coco Chanel. There's certain companies that while they may have no ties to their past was pretty darn ugly. Okay. And I don't need that. I don't need to be supporting that. Okay. And the argument has been made just recently. How long do you hold a company responsible for sins of the past? Like, when do you forgive them? Well, you could say, hey, like let's just look at this in as I feel like an open mind as possible. Volkswagen, not a good situation, but let me look and see if I can pull something else up. I don't want to do it like that. Let me put it here, and then I'll probably screw this up. So I'm kind of free with it. So if you don't like it, I'm sorry. Volkswagen. Okay. So the argument is, okay, that you can no longer hold a company responsible for like Nazi ties 100 years later or 70 years later or whatever. I can. Now, does that mean that Volkswagen doesn't manufacture fine cars? I don't know. It's not on my radar. It's not something that I'm interested in dealing with. Okay. And you say, well, John, you're a hypocrite. You own something. I'm sure you own something in your house that the people that invented it or the people that sold it to you aren't good people. I'm sure. There's a difference though between like knowing something, okay, and then having no idea. Now, even like, I don't think I'm maybe I'm an activist. I don't think I am, but I have been over time more and more uncomfortable buying products from companies that I think are not good for the world. I'm concerned about companies that do business with China in the sense that how much does China own that company? Specifically in tech, how many members of the Chinese Communist Party are on the boards of some of our large tech corporations, and how many of those people are pulling strings to keep the American public in a bad spot? What about TikTok? Is that something we should be concerned with? Do I have a TikTok account? Yes. Do I care if people are spying on me? Not too much. I mean, you almost sign up for these things when you download TikTok. Now you say, well, people don't know when they download TikTok that that's what it's doing. Well, they should. I mean, come on. Now, this tweet is fascinating to me. So let's just say, okay, let's forgive Volkswagen and let's say, okay, this is a great company. They're green, right? They care so much about the environment. All right. Well, if they care so much about the environment, why in 2007 were they fined the largest ever fine for automakers because they were rigging their diesel engines to the point where it said that they were, they had posted that it was producing so many emissions, and it turned out to be it was way the hell more than that. Now, is that a company? Okay, now we're talking about this in this particular sense. We're talking about this woman has moved from Tesla, which she felt was a green car, to Volkswagen, which was a company started by literal Nazis, like real ones. And then they're on the same plane to her because they're both helpful for the environment. And then Volkswagen, not more than 6 years ago, was fined the largest fine ever of an automotive company, 18 billion. Who comes up with this? Like, did she come up with this by herself? Because it's so dumb. It's so dumb. But I feel like I feel like at some point I feel like I've in the past maybe I've said stupid things as well. That's why I've always had a little trouble with social media, and I do have trouble with my live stream as well. It's like I don't want. There we go. Thank you so much. I'm gonna just go ahead and I appreciate you watching. I'll see you later. um, man, I just I get uncomfortable. Like if I say something wrong, do I have the right to take it back? I feel like I do. I've started. I mean, that's what I've always done with the live stream. But then with this particular case, I mean, she's not taking it back. She's actually going to go down this path. Now, who is her audience? Like, who cares about her? Like in the sense, like who follows her now? Who I have not. She's not on my list of people that I pay attention to. Would you be concerned if your children were influenced by this person who she may mean well. She may actually mean well. But it's just this isn't the way to go about it. It's a shame. It's a shame. Like the longer someone's in the public eye, it seems, the worse of a person they turn out to be. Or like the more beat up that they are. Like let's be honest. Elon Musk, okay? Elon Musk at PayPal, no one knows. He was at that other company before that, no one knows. Elon Musk at Tesla, all of a sudden, he's the greatest. Elon Musk, the richest man in the world, all of a sudden, he's the greatest. Elon Musk found SpaceX, the boring company. Wow. Elon Musk on Joe Rogan. I mean, just fantastic. Elon Musk buys Twitter. Oh my God. The arrows just come for the guy. Has Alyssa Milano been in the spotlight so long that, I mean, it's just inevitable that she's going to be saying these types of things? I guess she's living in a world that I don't live in. Okay. At the end of the day, we're not the same people. Her preaching to me is somewhat insulting. Will she call out the abuses of Nike? I don't know. I just wanted to put that out there. I hope that wasn't too heavy. Now I want to go over to an article that I had earlier. This is an interesting one to me. Have you seen it? It was in Google Trends. I like to see what's trending. It says Charles Barkley wants to get past this BS with Michael Jordan. Now, again, I'm old. If you grew up during my time, Michael Jordan might have been one of the more interesting people ever. And let me try to explain why. He was on the Chicago Bulls. You pretty much knew who played for the Bulls then. It was like, I remember they had Luke Longley, Scottie Pippen, Ron Harper, Dennis Rodman. I think Steve Kerr. Yes. I think. Anyway, they were really good. They won a bunch of championships. Michael Jordan, great basketball player. No one's arguing that. He decides his father gets killed on the highway. He was driving a red Lexus. I remember it. It was a very big deal at the time. And it was terrible. And afterwards, Michael Jordan decides, I think I'd like to play baseball. And then he was I don't know that he was really terrible at baseball, but he was like in AAA. I don't know that if he did make the majors, good for him. I don't remember. And then he's like, well, I guess I'll go play basketball. This isn't working out. So he goes and he plays basketball again. I think he was on the Wizards. Anyway, he had a great career. He was a big deal. Basketball to me seemed bigger than it is now. I don't know if that's true. I mean, we had Team USA, and they would just basically dominate every tournament or Olympics. It was just fantastic. It's a different time, though. I think we have to accept that. But anyway, Charles Barkley was a similar character. He was not very good compared to Michael Jordan. He's a good player, no question. He was always on a bad team. He was on the Philadelphia 76ers, and then he was on the Phoenix Suns. He was better on the Suns. He had an engaging personality, though. Very similar to Shaquille O'Neal. It's hard to not like Shaquille O'Neal. And I don't think that that's a manufactured persona. I think that's real. In this New York Post, if you look at the top in the recommended, it says Brady Quinn unloads on Booger McFarland. Brady Quinn, I can't stand Brady Quinn. Show me what he's done in his career in the NFL, and then he can talk about others. So anyway, and by the way, that guy was always hyped, and he was not that great. I'm just saying, put it out there. But anyway, so Charles Barkley run afoul of the law, I believe, a couple times. But he's made a new career of just being a basketball analyst who says outrageous things. And there's nothing wrong with that, and I'm happy for him. Michael Jordan, I don't see him much on TV. The point is, though, is that these were very, very, very famous people at one point in time. Michael Jordan, you would never see write something like Alyssa Milano wrote. He would never. He's too smart for that. Now, I'm not saying that she's dumb. I'm just saying that he's good. He knows how to manage his public persona. Anyway, enough of me going over. Let's say it says, so I didn't know that they weren't friends anymore. I thought they were great friends. It says Charles Barkley wants to go golf with Michael Jordan again. In an interview with Bleacher Report's Taylor Rooks, the host asked Barkley about recent comments he made on Tom Brady's podcast, in which the Basketball Hall of Famer said he and Jordan haven't spoken in 10 years due to something he said that offended the Bulls legend. Now, I bring this story to you because I think it's relatable. Wow, I am doing awesome tonight. I don't even know if I can get out of here. This is fantastic. I have to go to the manual. I have to go to the manual block. I don't even know. I'm going to have to go. Wish me luck, guys. I have to go here. This is funny. I have to go over here. All right. I don't know if that's going to solve it. We might have to deal with it tonight. That's kind of funny. So anyway, my thing was, look, I don't want to get hit with that. So anyway, I thought this was a good thing because we talk about friendships and we talk about when people say stuff about other people and it hurts their feelings, or I was going over like my relationships with people, and I don't think of these issues. It's just not something that happens. If someone says something terrible about me or to me, I just eliminate them from my life. It's not worth it to me. If they don't realize what they did, it's not for me to fix it. But anyway, it says it's really unfortunate situation for me and him, but I'm going to do my job and first and foremost, because I can't criticize other coaches and general managers and give him a pass because he's my best friend. I just can't do that. Well, he's not your best friend anymore because you're not talking. You haven't talked for 10 years. The next thing I would say is look, I agree with that. I don't have any real estate friends that can criticize me. I don't have many friends that are like agents or brokers that can criticize me in public because it doesn't make any sense. It's not something we would do. The first time somebody would do that, I would come at them. It says what I said was Michael's got to surround himself with better people, and I worry about him being successful. Now, that seems like almost innocuous. In fact, it seems like he's saying the people around you are terrible, not you. It says Barkley was referring to comments he made on a 2012 radio interview on the Waddle and Sylvie show on ESPN 1000 when he said Jordan has not done a good job as an NBA executive. That may be true. He may not have done a good job. I mean, I can see where you'd be upset about that if somebody said that about you. It says at the time Jordan was 2 years into his tenure at majority owner of the Charlotte Bobcats, now the Hornets. And Barkley explained that he believed Jordan was surrounded by the wrong people. I had no problem saying it. It was the truth. And he took offense and he called me, and it wasn't a pleasant conversation. We haven't spoke since then. I thought that was pretty good of Jordan to call and say, look, you irritated me. I don't know that I would do that. I don't know that I would give you the opportunity to know. Said, I thought it would blow over, to be honest with you. I thought it would blow over, to be honest with you. And he's stubborn and I'm stubborn, and that's it. It says, as for what Barkley would say to Jordan now to mend their relationship, I probably would say, hey, you know what I said? I believed. I'm sorry you took offense to it. And let's get past this BS and go back to playing golf and having fun. Well, I think look, if someone in a celebrity situation has shut you out of their life, as Jordan has done with Barkley, I mean, the only way Barkley can get back is to profess something publicly and hope that Jordan picks up on it. Says I probably would say, well, I did that part. And then it says Barkley added the two have been in the same room on numerous occasions through the years, but they never interacted with one another. Jordan has yet to address Barkley's comment. Does Michael Jordan even talk in the press anymore? I have not seen a lot of Jordan stuff in a long time. Moving on. This is the Deerwood Realty website. This is the mortgage rates, 30-year fixed rate today coming in at 6.63%, down 2 basis points from yesterday. Staying in the sixes, but you can see this line. I don't know if you can see the line that I'm doing, but there's a line right now. It's just kind of flattened. What is this about? How is it just kind of flattened? I don't know. I don't know. It's odd though, isn't it? So let's set the playbook, okay? We are worried about rates going higher. They've come down a bit and they've stabilized, whereas they just kept going up, and they had not been stable. They've been very volatile over the whole last 6 months or so. Since September. That's fair. Anyway, if you're a buyer, what are you doing right now? Let me just tell you, if I was a buyer in St. Louis right now, I would be watching houses that I'd be interested in. I would waiting the first weekend to see if they went under contract. I would go see the house. Then I would wait to see if it went under contract. If it didn't go under contract the first weekend, I would write an offer on maybe Tuesday. Would I write an offer for asking or below? If they hadn't had any offers, I'm writing one below. And that's what I'm doing. And I'm understanding that the real estate market, the prices are going to fall. I'm doing this knowing that in December, rates or house prices will likely be lower than they are now. And into the future, the same is true. That's the position that I'm taking as a buyer. As a seller, I am pricing my home aggressively the first weekend. I mean, if I think I could get let's say I think I can get 220 for my house, I'm coming to the market at like 210. Why? Because I need people that are the real buyers that are in the marketplace. I need them to write an offer. I need them to be excited about the house, and I need them to put in an offer, and I need to sell it. And right now, even if my house was worth 220, the way buyers are right now, they may not even be interested in it at that great discount of 10 grand. Look, I'm being honest with you. I'm putting it out there. You can mock it like you would mock Alyssa Milano's stupid tweet. Anyway, let's move on. We got some tweets today. I thought this was interesting. It says this is from Charlie Bilello or Bilello. I don't know. The median American household would need to spend 46.3% of their income to afford payments on a median priced home in the U.S., the highest percent on record, with data going back to 2006. That's not good. That's not good. There's the issue of affordability. Now we're gonna go all over the place tonight with tweets, and we're gonna talk about them all in different ways. But let's just think about this. Let's just look at the chart. In 2006, 42% of your income to afford payments on the median priced home in the United States. Okay, what happened after 2006? Okay, then you went down to 26%, up to 32%. Kind of stayed normal up until 2018, which is true. I'll be honest with you. In 2018, it was not easy to get a house. You had to come in over asking a lot of times. Anyway, moving on. Now we're at 46.3. The highest percent on record going back to 2006. Is 2005 different? 2004? I don't know. But something's not going to work out right when the American household needs 46.3% of their income to afford payments on a median price home. Look, I can't even get a median priced home in the United States. Okay. So, I don't know. Think about these things. Sellers right now are in shock. They've seen their neighbor's house go for, $50,000 over asking, and now they come to market and they don't even get someone to show up at the door. How can that be? It's only been 6 months. How can that be? How can people change so quickly? How can the market change? It just doesn't make sense. It's unbelievable, but it is. Lambert. The pandemic housing boom is an overlooked driver of the ongoing inflationary run. That's according to a new Federal Reserve paper. I'm not going to read the whole paper. It's very dense. But this statement, an overlooked driver of the inflationary run, very interesting. Not like we're gonna continue, and then we'll do some more analysis afterwards. It says the pandemic boom saw U.S. house prices spike over 40%. It also created a wealth effect that helped drive up overall U.S. inflation. This is the article. It says markets with bigger housing markets No, bigger housing market booms saw some of the biggest inflation upticks. The Fed paper makes it clear the pandemic housing boom was a major driver of both shelter and non-shelter inflation. If I'm reading this correctly, the Fed authors are saying that spiked home prices contributed to 39% of non-shelter CPI between February of 2020 and February of 2022. Look, I can't understand. I can't understand this. What did the Fed think was going to happen with an era of easy money? You're going to get trash companies, okay, and you're going to get assets exploding in value. But inflation, like, look, even if you lower the rates to zero, okay, that's okay, maybe. But now we're going to give out stimmy checks to everyone, and we're going to base those stimmy checks on, like, family formation. And then you say, John, the stimmy checks didn't pay. They were like, what, $2,000 a person or something? It wasn't even enough to pay our rent. Well, housing, the rent was, they couldn't get foreclosed on for the rent. You couldn't get evicted. You didn't have to pay your mortgage. What was that going to do to the value of money? Wasn't going to make it higher. Wasn't going to make it more. Just think of it like this. If you have more money, there's less scarcity. The more scarcity you have, the more something's worth. Think about it like art, fine art. Okay, you have a Picasso. Not everyone's Picasso. Is that wrong? We did the definition of inflation yesterday. Anyway, do you feel comfortable in America knowing that the Federal Reserve, anytime that the economy goes down, they're going to pull all these levers that are going to cause asset prices to increase, and along with that, possibly start an inflationary fire? Or would you prefer the Fed just left things alone? The market goes to hell. Oh, well, we tried. This philosophy is a dangerous one. Let me try to put it in some understandable way. I've thought this way all my life. If something happens, okay, some people will say, well, we've got to do something. We can't just let it happen. Other people say, this happened. There's not a whole lot we can do about this. Let's learn from this as best we can and move on. Government in general cannot say, well, this happened, let's move on. Every politician in the world has to come out of the woodworks to say, we can't let this happen again. We're going to get to the bottom of how this happened, and all this stuff. Something is coming, and climate change. Let's go with that. Climate change is here. It's already affecting our health. We must do something about it. We must act. Okay. It's quite different than like, hey, somebody came out with a car that's efficient and doesn't burn fossil fuels, and everyone wants to buy it because it's a good price. They can afford it. It's quite different. In Missouri, we have a stupid ad campaign right now. The campaign is no automobile deaths in the state. That's their goal. It's a laudatory goal, okay, but it's one they're going to fail every year. People are going to die in automotive accidents. Like, it's going to happen. No matter how many times you put on the radio, hey, don't drive drunk. Be careful when you're driving. People are still going to drive drunk, and people are going to still drive terribly. You say, well, what if we put that like breathalyzer thing in the car? Well, fine. Okay. But again, okay, you're not going to stop everyone. It's just, it's madness. It's just madness. Everyone feels like, we're going to do something about this and we're going to do something about that. No, you're not. No, you're not. Like there's a reason. There's a reason for statistics. I thought this was fantastic, though. They're doing something about inflation. Is it the right thing? Who knows? I don't think they. I think they should. I think the Fed has too much power. I'm a minority, I know. Here we go. This was interesting. It says, this is from Sean Frank. I don't know anything about Sean Frank, but I part of my goal is to bring you people that you may not have heard of before. It says, house up the street from me, listed for $5 million. So what does that signal immediately? Number one, these people are not in my neighborhood. Okay. We're like not at a $500,000. We're not even, probably after this all ends, we're probably not at 300. Okay. Listed for $5 million, listed for $4.2 million, listed for at least 15,000 a month, couldn't lease, listed for 3.9 million, can't sell. I emailed about leasing for 7,000 and got the owner's payment is 3 times that. So 21,000 a month. So the person is losing $20,000 a month on a house that's empty. How does this end? I mean, he's got it. It's there. I mean, will we see modification programs to help out this poor person who bought a $5 million house and now can't sell it for 3.9 million? Maybe can't sell it for 3.5 million. Maybe can't sell it for 3 million. Do we need to bail that person out? Is that how this is going to go? Don't be surprised. I told you last night, things are going to happen. Okay. They're going to paper this over. Okay. This is going to be bizarre. Odeta Kushi. She writes about real estate. So I thought it'd be interesting. It says U.S. pending home sales for October are expected to fall 5.5% from the prior month. We'll find out in 10 minutes. 10 minutes later, she says, pending home sales slid for the 5th consecutive month in October. Pending sales fell 4.6% from September and 37% from 1 year ago. Pending home sales are a forward-looking indicator of home sales based on contract signings. I don't know. I mean, it has to be because it's pending. If it were, it would be sold home sales if it were not pending. October was a tough month for buyers as rates hit the highest level in over 2 decades. However, mortgage application data thus far in November point to buyers returning to the market as rates have recently slipped from recent highs. Like there's this thing called a dead cat bounce. I don't know if you've ever heard of it. Anyway, even so, the housing industry is not through the storm yet. Rates will remain high and could even move higher until there's sustained evidence that inflation is receding. Higher rates keep buyers and sellers on the sidelines. I think that's fantastic that this person believes that we're in a storm right now and that it really isn't that bad and we're going to get right out of it. She's, I guess, a soft, and I don't want to put words in her mouth. Based on what I read, she's a soft landing narrative that everything's going to be fine. Housing is just going to take right back off again. As soon as they lower the rates, everything's going to be fine. I mean, honestly, in 2007, we saw a decade of declines in housing. Afterwards, again, it goes to like, what is your definition of a good housing market? Really? Moving on. This is an interesting one. I don't necessarily agree with Jay Parsons on anything. I think it's important to put forth different ideas because we will not know ever with 100% certainty about the economy, even in hindsight. We can attach narratives to what happened, but it's not an exact science, in my opinion. Digging more into the upward trend in the U.S. home ownership rate in 2022, in spite of higher prices, mortgage rates, etc. A few more thoughts. Recap. One of the great housing myths is that homeownership rate in the U.S. is going down due to higher home prices, higher mortgage rates, and increased investor purchases of single-family home. But the data does not support the narrative. Home ownership is up. I disagree with him wholeheartedly in this first setup. I don't care about the data. I don't. And is now at the highest level since 2011, excluding the blip of 2020 when the census had data collection problems due to the pandemic. Homeownership is up 60 basis points over the last 2 quarters, and it's now up 310 basis points since 2016. Why is that? The U.S. consumers are generally always exceptions, of course, and it was way true prior to the pandemic too, more resilient than most headlines suggest. They have been historically, yes. Owner occupants continue to represent the vast majority of home buyers, despite the boogeyman paranoia around investors. I'm telling you, it's turning into an investor market at the low end. Individual home buyers are not only driving up home ownership, they're not. They're not. Just look at Arizona and then get back to me. But unlike the mid 2000s, they're doing it with much lower risk mortgages, so foreclosures remain tiny. Consumers remain resilient, which is crazy. This is not correct. I disagree with this wholeheartedly. The lower risk mortgages, they say, okay. Do you know how to, we've eliminated subprime mortgages. Yes. You think there aren't people on shaky financial ground that have mortgages? A rising tide boosts all ships. A lot of analysis, a lot of analysts mistakenly assume a strong rental market must mean millions of people are getting blocked out of home ownership. But while there's always some of that, as there was prior to the pandemic too, due to high prices and low inventory, it's a much smaller factor than many realize, meaning it's a factor, but clearly on the margins, for sale and for rent demand tend to move together. I agree with that. I have noticed that. One reason why homeownership went up in 2022, despite weakening demand for both sale and for rent housing, could be the stickiness factor of homeownership. Few people are selling their homes to relocate, and higher rates add another complication that in the short term could keep homeowners in place. Now, look, it went up in 2022. Look, the boom stopped. Okay. Right around September in Missouri, in St. Louis, right around September. What it was before then, from say July to September, was people that kept getting overbid and outbid for house after house after house. Finally, those buyers were able to buy something. In the short term, could keep homeowners in place. By comparison, the rental turnover is naturally higher, even if turnover right now is still abnormally low by rental housing's historical standards. But rentals, especially apartments, will be more impacted by household consolidation, cohabitations, marriage, etc., among young adults. In fact, weddings in 2022 are reportedly at the highest level since 1984. These were always factors for rentals, but become more impactful when new lease demand totally freezes up, as it has in 2020. The home ownership rate is tied to household formation, which is stalled out in 2022, but the net impact seems to tilt in the favor of home ownership due to the factors above. What factors am I missing? Look, I don't know. I cannot prove, okay? I cannot prove that the economy plays a part in household formation. I cannot prove it. But I think it does. If you're a fellow and want to go buy your soon-to-be wife a ring during inflationary times, it's going to take you longer to do that, which will put off marriage. If you are having trouble finding a job, is your wife going to marry you if you're out of a job? Your soon-to-be wife? If you are cohabitating before marriage and you're each paying half the rent or half the mortgage, are you doing that because you can't afford something better? You can't afford to buy? We disagree. And what's what's great about America is we can disagree. One of us will be proven right. This was a fancy. CH comes out with all this stuff lately. Now, look, this is completely counter to what we just read. Are we in a housing shortage? A housing glut? Quick thread offering some simple metrics to gauge physical housing units versus physical persons, employees, rather than using vacancy, inventory, prices impacted by financial conditions. Since year 2019, soaring housing units versus minimal population growth divided by employment growth. U.S. has added 2.4 homes per unit of population growth and 1.83 homes per gain of employee. Okay. Putting the current period of housing growth per gain in population employees, clearly the greatest growth in housing units on a population or employee basis in U.S. history, but perhaps this was due to a prior shortage of housing. Okay. The average housing units per capita of U.S. population since 2000 is 0.42 houses per person. Average houses per capita of employees is 0.95 houses per employee. On both simple metrics, we are currently in oversupply. However, housing prices, inventory, vacancy all scream a shortage of housing units, as the fellow just mentioned before. Not this one, the other guy. Jay Parsons, I believe, if I remember it. Why? Looking at soaring median home prices, there seems to be a strong linkage between the Fed's interest rates and quantitative easing, rigging mortgage rates which are in the white column, to push up housing prices. So it looks that they're manipulating the housing prices. It does. Federal Reserve ZIRP policy made bonds essentially yield less. Simultaneously, massive federal government debt created a glut of dollars without the usual largest market in play. So a glut of cheap credit and dollars misallocated into stocks, real estate, and crypto. As these financial conditions have now turned alongside the organic oversupply of housing and previous misallocations due to short-term rentals, second home speculative purchases, overbuilding, a classic centrally directed housing boom bust cycle seems likely, which is counter to what we were reading from the guy earlier, Jay Parsons. Will he see this from this man? No. Or woman? I don't know. Probably not. I should retweet it, but I'm not that good. Housing bubble disrespector. I thought this was interesting. So, these people are playing at a higher level. Okay. Maybe it's not the most interesting live stream, but man, you could really learn stuff if you just kind of pay attention. So John Burns puts in this thing. I think it's in LinkedIn. It says, per analysis of 56 large metropolitan areas, both investor data and owner-occupant data fell 26% in Q3 2022 compared to Q3 2021. Here's some investor detail compared to last year. 57% decline by iBuyers, 27% decline by investors who own 100-plus homes, 4% decline by investors who own 10 to 99 homes. Puzzling, I know. 22% decline by small investors, including second home buyers. And because I know someone will ask, large investors purchased 2.7% of the homes sold in Q3. All investors comprised 25% of the home buying activity. So the housing bubble disrespectful rights theory, 10 to 99 homes are the core BRR, bigger pop kicks investors. It's easy to pause if you're under 9, may even be forced to, or if you're over 100, you have the scale to wait. But if you're 10 to 99 running on BRRR, which is basically where we're at, I believe they're talking about the easy credit market. Could be wrong. You don't have the luxury to pause. You can't stop your Ponzi. If you stop and vacancies rise, you start having to shuffle money around and deciding which mortgage payments to make first, eventually spirals into losing properties. That's what we have to look forward to. Darth Powell, he wrote so many good things today that we've got 3 things in a row. I mean, just deal with it, right? You have to. You don't have a choice. Look at 2016's payment. So they're basically people keep pulling data and just showing how bad it is. It says 11/16 the house was sold for 239 or price change to 399, sold for 373. Was again put on the market in 2022 and listed for sale at $900,000, which is ridiculous. In November, it changed the price to $850,000 asking price. Okay. 2016, the payment was $1,700 a month. Household income was $4,471 a month. And the front end debt to income ratio was 38%. In 2022, that same house was $4,990 a month. Household income is $5,917 a month. And the front end debt to income ratio is 84%. Sellers need to put down their crack pipes and do some basic math. I mean, it's literally the financing is just killing the market. Affordability has just been crushed. Okay, here we go. And then he writes, I love how elites were basically like, now it takes two people to earn the same amount as one from 40 years ago. But instead of someone staying at home with the kids all the time, we'll let you spend a few weeks right after they're born. You're welcome. I am not. I have no problem with women working. I have no problem with women in general. You know, it's not my thing. Okay. But I cannot believe there was a time when only one person in the household could go to work and there would still be plenty for everyone. It was not true when I was growing up. My mom and dad both worked. My dad's parents both worked. My mom's parents both worked. So our whole lives, like, you work. Husband and wife work. Still didn't make it out of the cycle. This is something I've heard before. This is something I want out there. By the way, it was the Rockefellers that pushed for women to enter the workforce under the false guise of empowering women, when really all it was about devaluing labor in the family. What, you thought having to work for a stranger telling you what to do made life better? I do think if you have not been a student of history, if you would just kind of look and see how certain movements are put together that seem like they're good for one thing, but they're actually trying to do something completely different. And then ask yourself, of all the things you see today, what would those things be that would be similar? Can't say anything myself because I'll be thrown off of YouTube for it, but there are things. There are things if you look. That ends our Twitter discussion tonight. I think I just screwed something up. I hope not. I don't know. I'm kind of getting tired. I'm going to do this one article and then I'm going to go. We'll do the rest tomorrow night. Let me check something. Not good. All right. So here is the Realtor.com housing predictions for 2023. Now, look, I don't put much stock in predictions. I always think there's things that can happen out of the blue that affect economics. And if you wanted to talk about 2022 as an example, many economists were not anticipating Russia's invasion of Ukraine in their models. And when that happened, it blew their models up. They were not wrong for thinking a certain way about the economy. Okay. But if you don't anticipate shocks to the economy in your analysis, you're going to get, bad results or inaccurate results. Let's get to it. Safe to say we've never encountered a housing market nearly as unpredictable as the one we're in right now. I don't know about that. After months of navigating wild fluctuations, home buyers, sellers, owners, and renters are now desperately trying to read the tea leaves, trying to figure out where real estate prices, inventory, sales, and mortgage rates are going in the next coming year. Well, mortgage rates are going up. Inventories are going to stay low. Sales will be down. And real estate prices will also be down. I don't need to read tea leaves. I'm in the business. I know exactly what's going to happen. And just in time, Realtor.com is to help them all figure it out with our annual housing forecast. Bottom line, homeowners and renters hoping for financial relief in 2023 will likely be disappointed. I like how they put that. I mean, think about it. You lose your job. You can't afford your house. You can get thrown out of your rental, but you'll be disappointed. But they won't get whiplash either. The dramatic swings and wild gyrations of the housing market are expected to taper off as the real estate ecosystem continues to slow. We don't have dynamic swings and wild gyrations really anytime. Even during the hot market we just experienced, I mean, it had been that way for months. While the Realtor.com 2023 anticipates home and rental prices will keep climbing next year, I do not. The increase will be much more modest than the huge surges seen earlier this year. Mortgage interest rates, which have become the bane of many first-time and other buyers who can't pay it all in cash, will remain high, but they aren't expected to substantially rise again. We're going up 50 basis points in December. That's what's been telegraphed to the market. That's after like 75, 75, 75. I mean, maybe they've overdone it. We'll find out. So it's going to be a tough year for home buyers, home sellers, and the overall housing market, says Realtor.com chief economist Danielle Hill. But we're going to take some steps toward a better balance between buyers and sellers. Well, I think that's probably partially true. Buyers are going to demand premiums to take your property from you because they're going to make you pay for the way they were treated the last 12 months. One bright spot for buyers will be the number of homes for sale, which has been hovering near crisis level and is finally expected to rise. Well, will that be enough to bring buyers back into the market? This is what home buyers, home sellers, and rentals can expect in the new year. Well, boy, that's a good question. Will that be enough to bring buyers back in the market? No. They will not come to the market unless they can afford the homes that you're putting out there for sale, and they cannot do that with high mortgages. Here's an infograph. Buying power will be on the decline. 28%. The typical mortgage payment will be higher, up 28% to $2,430, pricing many buyers out of the market. Mortgage rates will remain elevated. The average mortgage rate will be higher than 2021's historic lows, with early 2023 hikes followed by a slight retreat to 7.1% by the year end. Growing but not slowing. Home prices will continue to rise, but at a slower rate. I don't believe it. Stocked up with a silver lining, inventory will still lag 2019 pre-pandemic levels, but will be up from 2022, giving buyers more homes to choose from. Buyers had homes to choose from even in this time. It was just that they were gone within a weekend. Home prices won't drop, defying expectations. I don't agree with that. Simply put, higher mortgages have utterly bludgeoned the housing market. Buyers, particularly first-timers, can't afford to offer as much for a home when their monthly payments are inflated by higher interest rates. But home prices next year aren't expected to crash. They may not crash. Now we're playing semantics. Collapse. Explode. Nationally, Realtor.com predicts they'll rise 5.4% over a year in 2023. That's still going to hurt, but not as much as the double-digit increases seen during the COVID-19 pandemic. Median monthly mortgage payments are expected to be about 28% larger this year and twice as large as they were in 2021. To put in perspective how tapped out home buyers are, monthly mortgage payments were about 3/4 larger in late October than they were in 2021. The latter figure depended on that week's average mortgage rates. Most other forecasts call for price declines, but that's not what we're expecting. Well, you're wrong. Realtor.com is wrong. They will be proven wrong. You could save this tape. You could clip it right now and you could play it back. But maybe I'm wrong. What do I know? I'm not a Realtor.com economist. Sellers don't want to lower their asking prices too much after watching their neighbors make bank just a few months ago. And there's still too many people who want homes that are available residents to go around. disagree. We just looked at the idea that it's probably not being the demand is not being driven by population growth. The demand is being driven by low interest rates, and people are buying second homes, etc., investor properties. What buyers can afford to pay with mortgage rates as high as they are may not match with what sellers are looking for. That's right, and that's why prices will go down. Home price growth will continue to slow and could even dip a little over the next few years. Realtor.com anticipates the correction in the market could last through 2025. So I have it's 2022 now. I have 2 years, 3 years to look forward to terrible business. It's not going to happen. I'm still going to do business. Landlords are aware that demand is not as eliminated. I'm sorry. Renters, many of whom are already suffering from sticker shock, won't fare any better. Nationally, rents are expected to rise by 6.3% year over year in 2023. While painful, it's also far below the double-digit jumps experienced earlier this year. Look, if you're a property owner and you've owned your property for 20 years, especially in like a multifamily rental, like you're just making bank at this point. And you're doing it because you can get away with it. And there's nothing wrong with that. That's what everyone's doing. Now, if you are an investor and you just bought a property and you now have to pay, your debt service and it's much higher, you're not making bank. And should things turn, you're in deep, deep trouble. Landlords are aware that demand is not as unlimited as it was at the beginning of the year, says Hale. The exceptions of the big expensive cities where rents seemingly fell off a cliff during the pandemic as renters fled to quieter, less populated communities. Landlords slashed their asking price, then jacked them back up, and then some while tenants returned seeking rentals. There may be more room for rents to grow in 2023 in the urban areas than in the suburbs. Well, great. Mortgage rates will stay frustratingly high. Soaring mortgage rates have ground the housing market to a halt, forcing many would-be buyers to stay put or rent longer than they'd expected. Many plan to jump back in the home buying fray once rates come down, but they may have to wait longer than they'd hope. Realtor.com predicts the mortgage rates will average 7.4% in 2023, trickling down to 7.1% by year's end. Yeah, that's not going to work. It's not going to work. Rates are expected to remain high thanks to the Federal Reserve. As it hiked up its own interest rates to slow inflation, mortgage rates have followed a similar upward trajectory, and the Fed seems committed to continuing to raise rates. While the Fed's actions are only one component that goes into mortgage rates, it's emerged as a significant one this year. That's expected to keep rates around 7%, where they were a few weeks ago. Even though we have seen some progress on inflation, it's 3.5 to 4 times higher than the Fed would like it to be. That means there's more work for the Fed to do. The number of homes for sale will surge. The silver lining for buyers, long frustrated by the anemic number of choices out there for them, is that more homes will be available for sale. The inventory of properties is expected to spike 22.8%. This includes only existing homes, which are previously lived in residence, and excludes new construction. It's going to be even higher with the new construction. However, the surge won't be due to more sellers putting their homes up for sale. Homes are expected to sit on the market for longer, as there will be fewer buyers who can afford to purchase property. With mortgage rates so high, these homes will accrue. That's why inventory will rise. It's definitely needed, said Hale, the increase in real estate on the market. Buyers are more cautious in an environment where costs are higher for them. They literally were not. They were just buying anything 2 months ago. While those extra homes are solely needed, they're still far below what they are in a more normal housing market. The number of existing homes forecast to be for sale in 2023 will be 15% less than in 2019, when there was already a national housing shortage. Again, this is a narrative that I don't agree with. And I'm allowed to not agree. Now, the issue, if you've bought a home and you're at 3% on your mortgage or less, why are you ever going to put your house on the market for sale? The only reasons are life events. You got a new job, you got to move, you've got more children, you can't afford, you can't fit in the place where you got married, you died, life events. Despite scarcity, builders aren't expected to put up as many new homes in 2023. Their pool of customers is drying up because buyers can't afford the homes at higher mortgage rates. New construction is anticipated to fall about 5.46 year over year, 5.4% year over year. They can't build them at prices that buyers can afford. Land, materials, and labor costs are simply too high. They're pulling back on permitting and the housing units they're starting. That's true, But there's so many out there that are in the process of being built. So many out there. While the number of home sales will fall, the number of home sales expected to keep dropping as buyers keep getting priced out of the market. Sales are anticipated to fall 13% year over year and then keep depressing by 14%. There will be just 4.53 million sales next year, the fewest transactions since the depth of the Great Recession in 2012. I'll still be okay. I don't really. These predictions include only existing homes and exclude new construction. Realtor.com expects the usually busy spring season will be quieter than normal. In 2023, as buyers struggle against the higher prices and mortgage rates, renters are already stretched thin, contending with higher rising rents, along with inflation making it difficult to save up for a down payment on a home of their own. Many homeowners will simply stay put and weather the storm in the housing market. That's right. Plenty are locked into mortgages with very low rates that will make them think twice before selling their property and purchasing a new one with a mortgage rate that will be significantly higher. Even if they're downsizing to a much smaller home, it could cost them significantly more to do so. So they probably won't. The home ownership rate in America is expected to basically hold steady, ticking down from 65.7% in 2023 to 65.8% in 2022. Those who do sell will still do well. The average homeowner will see their equity rise by $25,650 in 2023. Those in more affordable parts of the country could even see higher gains as people from higher priced markets relocate to cheaper ones, bidding up prices. A severe recession could append these predictions. Bum, ba, bum. And you hit the nail on the head right there. While Realtor.com doesn't expect the nation will succumb to a major recession, economists aren't ruling it out entirely. Typically, during a downturn, the Fed cuts its rates. This could cause mortgage rates, prices, and home sales to fall. While some buyers are likely to jump into the market as soon as rates go down, others won't want to make what is often the largest purchase of their lives during a downturn when their jobs might not be stable. And some folks will become unemployed or lose overtime and side gigs, making home ownership unaffordable. If prices decline, it might bring buyers back, but a more severe recession will mean fewer sales. That's exactly right, especially if you have the condition stagflation. Let me go here. Look, I didn't get every word I needed to get tonight. I'm sorry. It just seemed like that's the way it was going, and there was nothing we could do about it. I want to thank you for watching. Thank you for listening. I'll be back tomorrow night at 9:00. I mean, I think so. Yes, tomorrow night, Thursday night, December the 1st, I'll be back. We'll go over the articles that we didn't get to tonight. We'll find some new stuff to talk about, housing related, maybe some pop culture to enjoy ourselves. Thank you for watching. Thank you for listening. I will catch you tomorrow night. Be there.